Yes, and it's also interest rates going up really, really far and fast, right? So we have the Fed, we have interest rates creeping higher, we have inflation, they're way behind, and at the same time, we have pretty good earnings. So it's very tricky right now, Scott. It's a very much of a stock picker's market. If you look at earnings, the economy, the market-sensitive companies, the reopen names, the airlines, I mean, that's happening in real time. And services is 70% of U.S. consumption. So that's a really big piece. And they're coming through for now, right? Well, but then we also have what earnings are coming in at. And they are beating expectations. Only 20% have reported so far, but they're beating by 8.5%, 9%. And 75% of the companies are beating. So there's this cross currents here. And that's why I say it's a stock picker's market. Find companies that have pricing power.
Man, as long as the 10-year is around 3% or looks like it's going in that direction, stocks have a problem or no?
I think they do. I think certain ones do. I mean, you're seeing it in technology, right? You're seeing it in
kind of seeing it everywhere today.
You are seeing it everywhere today. And that's what's unusual about today. Energy and commodities have actually really rolled over. And that's despite the fact that Dow had great numbers with great pricing power. Freeport-McMoRan, Nucor. I mean, you had some really good numbers in the commodity space, and yet they couldn't hold the gains. But also what can't hold the gains is something like a Tesla. It was up as much as 10% today. It's given back some as well.
It's all about the May meeting, I guess, right? Powell, Sarah was speaking with the Fed chair in that roundtable today, and I want you to listen to what he said about the direction of interest rates from the conversation that Sarah had today. Let's listen to Jay Powell.
I also think there's something in the idea of front-end loading whatever accommodation one thinks is appropriate. So that does point, that points in the direction of 50 basis points being on the table. Certainly, we make these decisions at the meeting, and we'll make them meeting by meeting, but I would say that 50 basis points will be on the table for the May meeting.
I mean, didn't we know that? So why the market have an upset, right? I mean, they're trying to tell you whether, and it's not just Jay Powell, the Fed chair, who's telling you.
Yes.
And then we still get upset when we hear it. What's up with that?
I know. Well, I just think it's just the beginning, right? And the fact that all of a sudden they're coming to this understanding that, oh my gosh, we really are behind the curve. We have to do stuff, and we have to do a lot more of it. And it's not just 50 in May. Now it's like, are they going to go 75 in June? I think the economy can handle it because
75. If they go 75, you think the economy can handle it?
50 plus 75 in total is not that much in terms of where rates are going. So to me, the economy can handle it because, what did I just say, right? Services. The economy, there's a lot of momentum in the economy. I'm not saying that we're not going to slow down, Scott.
Yeah, but we got two different questions, though, okay? You may be very right that the economy can handle 75. You can't tell me the market's going to handle 75?
Well, the market's not handling it right now, right? We're actually selling off ahead of time, and so maybe we see a relief rally. I don't know. There's a lot of unknowns. What I'm hoping for is that they do raise 50. Maybe they go 50 again in June. Maybe it's 75. But then they assess what's happening in the economy. By the way, I do not think if they do those two moves, that changes inflation in any way, shape, or form. And the one thing I've learned so far in earnings season, the supply chains are not getting easier. They're not getting fixed, and that's what's going to help on the inflation front.
So I mentioned we're waiting on Snap earnings to cross the tape, and you'll see the stock, which can be volatile when they do report their earnings. Remember, it was up 58% last quarter when they reported their first profitable quarter.
Yeah.
It's a smaller market cap relative to a Netflix, obviously, although Netflix is now closer to what Snap is after the rollover.
Yeah.
Is more riding, though, on these numbers, given what happened with Netflix and now real questions about the growth trade?
Yes, because the stock trades at a crazy multiple, and this market doesn't want a crazy multiple, right? At this point, I mean, it's trading at 11 times price to sales. I mean, if you look at it's trading at 25 times EBITDA. I mean, Facebook, Meta is trading at 9 times EBITDA.
58 times forward PE.
That's right. So the market doesn't want that. And if higher rates are not going to help those kinds of stocks. So I think they're going to have a pretty good number. I think their engagement base is much faster growing than something like a Facebook or a Meta, right? They've got the Gen Zs and they've got the millennials. So I think the number might be pretty good. But they've got TikTok competition. They have European exposure. And we know Europe is slowing down pretty quickly. So there's going to be these puts and takes. The thing that they have done over the last year, invested in tools and invested in content. And so I think it will be a good number. It's whether or not the market, rewards
if it's
that.
good enough, right? Because now the bar has been raised, given some of the Netflix fall and some of the other stocks.